So today I'm going to do a video responding to you guys. So on this video here that I did 2 days ago, I said, why am I very bullish on growth stocks and small market cap stocks? And at the end of the video, I said, if any of you guys have any subjects you want me to talk about, post them in the comment section and I will, if there's a popular one, I'll do a video on them. Now, there was so many suggestions. I was really blown away with how many suggestions there were that I thought, you know what? I'll just do a video, respond to every single comment and give my thoughts on them. I think it's always really good to do that because, I want to, I want to be a community that, keeps you guys involved, and sometimes it can be really tricky for me because I'm sure most of you know, I still work a full-time job, and getting through the comments as well is just something when you're doing like 5 videos a week is sometimes not one that you can go through every comment and get to replies of them. So I thought this would be pretty cool. I want to keep that conversation up with you guys in the comments, and as well as that, I always want to keep you guys give me this support to kind of like keep making these videos with there's a part of that when you get a video that like hits off with quite a good views, it kind of like, whoa, that did well, that video, it gives you that motivation to then go back and make the video the next day. And when the like button's absolutely destroyed, that also when you see the likes, so you get a video with over 200 likes or anything, you're like, oh, people really enjoyed that video, it gives you that motivation. So it's something I should say more often is like, thanks to you guys for coming out here and supporting me doing this, because I've done it. I've done YouTube for quite a few years now, but talking about the stock market, but definitely when the support you guys give also gives me that extra. I do enjoy it anyway, and I've always had the motivation to do this. But when you guys like give that extra support, it does give me like. There's a few times where I get home from work and I've been at work from like 7 a.m. and I've got in at like 5:30. Sometimes it's 7:30 or something like that, and I'm a bit like a bit tired and all that, and then something like that, and it really does like kick you on to like I'm doing this. Let's talk about something. So yeah, thanks to you guys, and we'll go through this here together. And as well as that, I think like sometimes that you guys ask like some questions in the comment section, and I feel like when you're actually typing a message, you don't have enough time to kind of like get your points across what you want to make to the comment. So I think that's also a really good thing. Like here I can give you a bit more detail on that question, I guess, as well. So I guess it's like a Q&A session, and a bit of a Q&A session that's not live. I guess it's like a pre-recorded one. So anyway, we'll get on to that. We'll get on to this video responding to you guys, what you guys have. So there's 181 comments. I'm sure there's going to be some spam ones in there. The amount of spam ones at the moment is just absolutely ridiculous. Like, it's out of control how YouTube aren't dealing with this. So sorry about that. I know some of you guys do put some comments down, and sometimes there's always like, oh, contact me on so-and-so, and it's this fake WhatsApp one. Don't ever do that. It's not me. I'm sure most of you guys know it's not me. But yeah, I just thought I'd say that. So like this one here, this is we're on a spam one. Let's just report this one here. So the first one, DT, would be good for you to show how you calculate the fair value of a company, especially when business doesn't make profit. So I've got a couple of videos on this. Maybe it's worth doing an updated one. Definitely when you're talking about valuing a company that does make profit, 100% the hardest thing to do, the hardest stocks to value, because obviously what you want to be doing is assessing revenue growth and then how much of that gets to the bottom line, and with the bottom line you can start working out a lot of different things from there. Now obviously when it has no bottom line, when it has no profit, that makes it a lot trickier, and that's why personally for me, I've always said I personally didn't touch a lot of unprofitable stocks for the first few years that I started in the stock market. Only recently, I'll say recently, I'd say in the last kind of 3 years is when I've started touching a lot more unprofitable companies, because there is that little bit more risk to it because you don't have a lot of profit numbers. But yeah, I mean there's a lot of different things that you can use. There's a lot of things that I use. One thing that I like, what I see a lot of things that personally for me, things that I don't like is that there's a lot of people that use a lot of like discounted cash flow methods, which I use myself personally sometimes, but quite often they'll put all these numbers into this calculator, and then they go, okay, this stock's worth $52, and I'm like, it's not as simple as that. It's not as simple as getting one number and going, that's what that stock's valued at, because it doesn't work. Because the thing is, you've got to remember is that if you're in a stock market that's negative, like what we're in right now, there's no way the stock's going to be valued in that. And more than likely, if we're in a stock market that has expansion, that has companies trading at a lot higher metrics than what they should do, then that's going to probably be higher than that. Let's take, if we take February 2022, right now, a lot of the companies are now valued at the lowest metrics they've ever been at. If we take February 2021, a lot of the metrics were valued at the highest they've ever been. So one of the big things that will determine how much your stock is valued at is in the current cycle, the mood of the market. If you're in a positive market, the metrics are higher. That's probably going to be one of the biggest causes of why your stock is going to be higher. If we're in a stock market that's negative, the metrics will be lower, and that's what's more than likely going to value the stock at a lower price. So for me, like, I do take like a lot of that into consideration, but that is one thing that people miss out on, in my opinion. That's the big thing, is that people don't appreciate that you can't just come up with a number, this stock is going to be valued at so and so, because it's never going to happen. If it was that easy, everyone would use this magical method or this magical calculator that someone designed that it goes to this certain price. For me, I always look at a long term. I look at a long term, and what I do is I go, first of all, I'm gonna work out, you know, are they going to buy any shares back? What's the revenue growth? How much is that going to go to profit? How much is the profit margin going to be? And then I do a lot of different scenarios where, okay, worst case scenario, what if the revenue is this much? What if the profit is this much? What if the margins is this much? And I do like a worst case scenario calculation, and then I do like a best case calculation, and then I consider, okay, are we going to be in a stock market where metrics are compressed, and then we're going to be in a stock market where metrics are expanding to high multiples. And that's for me what I start working out, and I take all that into consideration. You know, there's definitely no guarantee that this stock is going to this price in this year, on this date is going to be this price. All you can do is put a lot of the odds in your favor and work out, okay, roughly best case scenario, the company does these numbers, this is where it could be. Worst case scenario, it does this numbers, where could it be? And as long as you get somewhere in that range, and that's why I always say, personally for me, I look for a 2x return. The reason why is that sometimes there's a lot of stocks that I expect to get more than a 2x return on, but that's best case scenario. And then I look for that and go, okay, worst case scenario, can I still make a 2x return from that? And as long as I make a 2x return in that company, I'm happy with that. If that stock ends up doing even better than that, obviously I'm even more happy with that. And that's probably based on, revenue growth, profit growth, growing at, really good growth, and also we're in a quite a bullish market as well. And like I said, when you say about especially a business that doesn't make profit, yeah, that's a tricky point. You know, you've got to kind of start working out, okay, you have to work on, potentially, revenue, a lot more revenue metrics, and then potentially further down the line you go, okay, if they get to profit in this year and this year, what kind of valuation can we trade at here? That is definitely the more tricky one. So maybe it's worth it. I need really a good kind of 20-30 minutes to walk you through everything, but that's what I would say right now on that point. And that's exactly why sometimes, like, doing these videos, I can talk about that a lot more easier. I can get that across. There's no way I could have typed that out in a comment. MT says, I agree that we should look at fundamentals of growth, but I've seen people calling companies as growth where the fundamentals are not moving in the right direction at all. Sometimes growth stocks drop for a reason. 100% correct. So that's the big thing, is that as long as the fundamentals of the growth stock are improving, they will do well. That is very key. There's quite a few people that will say, oh, it's a growth stock and that's why it's dropped. And that's a good point. Like, sometimes some of these stocks are just terrible. That is why they're dropping, and the fundamentals aren't growing. I'll take an example for a company right now. Let's talk about, like, Skills, for example. Skills is not going to grow in 2022 after their outlook, after their earnings. That means that the fundamentals aren't improving. Now, if the fundamentals aren't improving, that stock is not as good as what it was 12 months ago. And that's a key point of a stock there, that you couldn't say, oh, it's only dropping because it's a growth stock. You could slightly argue that obviously with the market that we're in, we are beaten down, but that stock is never going to go back to where it was valued at $40 at the moment, because the fundamentals of the company aren't improving. And there's plenty more out there that you could say for, as long you have got to have a company, a company like, let's say for DraftKings, for example. DraftKings has come off a year where revenue has grown 100%. It's now having more states profitable than ever. The path to profitability is very, very clear now. And all the fundamentals of that company's increased. What's happened to the share price? It's gone from $70 down to $20, $21. Now, that's the stock there that the fundamentals have just improved on that company. And what's happened to the share price? Now, that's an overreaction for sure. But if we take a Skills, for example, Skills deserves to have a drop because the fundamentals haven't improved in the last few months. So yeah, that's a very good point, MT. That is something that you have to keep looking at. There's a few people that say, or it's just a drop because of the market they're in, and generally that stock, it could actually be a bad company. It's very true. Obama Time for Change says, I'd be interested in your thoughts on the Hook group. So I did a video, I believe like 2 months ago on the Hook group, so go check that one out. It'll be more than what I can sum up now personally. I like it, I like the company. Obviously it's in a bit of a tough situation at the moment, a lot of pressure on management. Not come onto the stock market, valuation got a bit stretched, but now in my opinion it's definitely a cheap valuation. For me, I can't buy the Hook group just because I've got so many things to buy at the moment, and personally for me, the Hook group reminds me a lot of Boohoo at the moment, and I tell you something, I don't need another stock in my portfolio like a Boohoo. I've got enough on my plate, sorting that one out, buying the dip on that one to not get involved in the Hook group. So yeah, I like it. I would say that I am very interested in it. Not a suit for me right now. If Boohoo, if we kind of have a good stock market running in the next few months and the Hook group is still kind of at cheap valuations, then I might consider buying it. But I like it. But for me personally, it doesn't fit my portfolio, is what I'd say on that one. We've got another spam one here. We'll just get rid of this one. We've got another one here saying a video on how you value a company and decide if the share price is above or below the valuation. That would be interesting. So yeah, so coming to the value in the company is very much like what I just said on earlier in the video. It depends on a lot of things like your profit growth, revenue growth, margin, share buybacks. If you're in a bull market, if you're in a bear market, metric expansion is the key thing. So that I would say very much same to that. And I guess it's kind of coming if something is below a valuation or below the average valuation. I guess what stock stands out to cheap to me. So for me, what I'd look at is I would look at historic metrics a lot most of the time. So for me, if I'm looking at if a stock is cheap, I look at the company and going, okay, is the growth rates very similar to what it's done previously? And then you put a stock at, the lowest metrics it's ever been at. So for example, if I went on Boohoo, for example, and Ticker is a really good website for this. If I go on Boohoo and I see like the P is the lowest P it's ever been at, that's obviously something that's standing out to me. Same for a forward P. If the forward P is very cheap, the PS ratio, enterprise value to earnings, all these sort of metrics, EBITDA, I would go for Ticker's normally the good one to go through. If I see a lot of metrics standing out as being cheap, that's already a sign to me that I'm looking at this as being quite sold off. And then the same again, I go off historic valuations. And then just for myself, when you've been investing into a lot of companies, in my head I roughly have a good idea of what metrics I should be looking for that company. So for example, like in my head I already know if a company's kind of growing, let's say like 20% revenue growth and growing profit, and that company is trading down at a forward P of probably 25 or below, in my head I'm already ticking going, okay, this is a very good growth company that's profitable at 20% revenue growth down at forward Ps of 25. That's already like, because it depends on every situation. It depends on, I'm just kind of throwing it out as a broad kind of measurement here. There's a lot of other things that I'll take into consideration, but in my head I'm already ticking away thinking about other stocks that I've traded down here and how they've worked out. So I also have a bit of experience from other investments that start ticking through at the moment when that sort of thing happens as well. But yeah, maybe it's worth a video on it. It's been a while since I've talked about it. I've got a few videos on my channel, but maybe an updated one would be a good one to do. Pickle Rick says, I reckon it will be another 2 years before my account is break even. Wow, you must have some stinker stocks then. You've also got to remember is, the stock market changes so fast. We went from, if you go February 2020, everyone was like down in the dumps and everyone was like, oh, this is going to be a rough few years. And then by February 2021, everything's at 52-week highs, higher than pre-pandemic. You go another 12 months, everything's back down like 50-60%. And, the stock market changes so quickly in 12 months. So maybe maybe you've got like terrible stocks that you're down like 80% on everything, and maybe the fundamentals are like disintegrated on them. But you've also got to remember, if you're only down on some stocks like 30-40%, it only takes a good stock market for 12 months and you'll be okay on them. So I mean, I don't know what your situation is there, but that's my thoughts on that. Chazinho, I agree with everything you said except the last point on 2022 being a great year for growth small caps. Macroeconomic environment isn't positioned for another bull run. Now, everyone always says that, when the stocks keep going down and it gets bear and bear and bear and bear, everyone says that, we're not going to have another bull run. Look at the valuations a lot of these growth stocks are at. A lot of people said that when in February 2021 we were at 52 highs, oh yeah, we wouldn't have a stock market that, you wouldn't have all these stocks that pull back, 60, 70, 80%. It's always, it's always the darkest before the dawn. You know, it's one of those. Carl Simpson says, also, I always see you comment on my videos, Carl, by the way, so shout out to you. Also, Evraz, I hope I said that right. I think that's the steel company, isn't it? But I don't know it that well. I think it might have some ties to Russia, I'm not sure. Have put their dividend to 180%. Madness. I'm feeling that might be something to do with Russia then if your dividend yield's 180%. Personally, for me, I won't touch it. From what I know, but I don't know it that well. I don't like commenting on stocks I don't know too well, but that would be my initial feeling on it. BMBM, once again, I always see you in the comments. Very popular. You like your UK stocks, I know that. Do a video on micro cap dividend players. An example would be Catebox or Calnex. I've seen that one mentioned a few times. I think that's quite a popular one on the UK scene. Those types where in bear markets you can catch some crazy future dividend yields to come. That's a very good point. You know, when you have a lot of stocks that do crash, you can get really good dividend yields. Like an example one is like Foot Locker right now. I think that's like a 5% dividend yield. So yeah, potentially, I'll be honest with you, a lot of UK stocks generally have terrible terrible YouTube views. And unfortunately, this is how the cycle works on YouTube. So if I bring I brought a video out on Catebox. It was the worst video I had done in the last 10 videos. And because my Catebox video, like, it got like 800 views, and normally my videos get 2,000 plus views. Because my Catebox video was terrible, it basically meant that my next 3 videos suffered because of that, because YouTube didn't push it out in the algorithm because my video didn't do well. So yeah, I mean, I would like to do probably a few more videos, but I've also got to respect the YouTube algorithm a little bit as well, because it just kills off the algorithm for my side of it, which is a bit of a nightmare. So I'll have a think of it. I'll think if there's a way around it or something, but yeah. Julian says stock markets in Europe and soon everywhere are currently free falling. Stock markets have been free falling for a good time. It's only the S&P and Nasdaq that's held up in the last few months, and then we got to kind of January and they've started joining in. But if you look everywhere, the last kind of 6 months, I would say, for a lot of stocks have been horrible. So yeah, inflation and cost of basic goods are spiraling out of control. Yeah, that's why a lot of them have been going down at the moment, topped with the Russia situation and the Fed. We're heading knee deep into a recession. Don't know if I agree with that. The last thing you want to do is buy growth stocks. Yeah, I'll be honest with you, I don't agree with that comment. I think that growth stocks have basically had 6 months of being absolutely sold off. You know, a lot of them have lost half the value at the moment. And, you know, the stock market, especially small caps and growth stocks, are quite often a lot of the first ones to kind of recover from these situations. And normally the stock market, like if you have, the stock market normally crashes before the recession, and the stock market recovers before we come out of the recession. So yeah, I personally I probably wouldn't agree with that comment, but thanks for commenting. Tesla is the exception and not the rule. It's very rare. Oh, sorry, this is from Adam Sanders. Tesla is the exception and not the rule. It's a very rare example, and to compare ordinary businesses to Tesla is ridiculous. So I think this was a video that I think I commented about. I can't remember exactly what I said in the video. I've recorded a few videos since here. I think I mentioned it. Maybe I was talking about, I think it was something to do with like negativity in the share price or something, and how in 2019, and then Tesla went on to do absolutely amazing. I think that's what I mentioned it. So I don't think I was kind of like comparing other businesses to Tesla. I was kind of using that as an example of, like, you know, you got to remember Tesla at the time, you know, like it's called, you know, an exceptional business is Tesla, but you got to remember in 2019, it wasn't until it went on its crazy run that everyone went, yeah, Tesla's a great company. You know, in 2019, you know, Tesla wasn't viewed that. Tesla was, you know, it was very 50-50. There was a lot of hate out there for Tesla, and then it proved everyone wrong. So, you know, it's easy to say that now. It's easy to say that, oh, Tesla's an absolutely amazing company, but you got to remember that it wasn't that in 2019. If everyone knew that in 2019, everyone would have been buying, and there wouldn't have been all this kind of agenda against it. There wouldn't have been all this short interest out of it. You know, it's one of those that it's easy now to say, oh yeah, obviously, but in the time it wasn't that. Otherwise you wouldn't have seen that much negativity out there towards it. And it was not me kind of comparing like the all these at the moment there's all these stocks out here, and when everything turns right, they're all going to go like up, like crash Tesla and go absolutely crazy. That's not what I'm saying. I'm saying that this is what it's like. You know, Tesla in 2019, it's just one of those one of the examples, like, you know, so much negativity, everyone's against it, and all of a sudden, very quickly, you are rewarded for kind of having the patience, going through that dip and getting the reward. So yeah, Carl Simpson with another comment. I always like your videos, man. Thank you so much. When are you planning on retiring, and will you carry on doing YouTube videos for us who haven't retired early yet? I mean, I don't have no plans of retiring. I enjoy working. I look, and I don't know if I'd ever be able to like retire. I do enjoy working. I still do my full-time job because I generally do enjoy it. There's a few days where you go, oh, that was a long day, but I do enjoy it. I enjoy making YouTube videos. You know, like, I don't really get paid that much for doing YouTube videos. I think like I get about $300 a month for doing YouTube videos, which, when you consider like I do 5 videos a week and it takes around about 3 hours to 5 hours to make them videos, I mean, that works out as what, like £3 an hour. So I think that kind of sums it up. Like, you know, I do YouTube. I've done YouTube for 5 years. I did YouTube for 3 years without getting paid. I'm not bothered about the money for YouTube. It's nice that I do get a bit of money now. Don't get me wrong. You know, I'm not gonna lie about that point. But it's still to the point, like, he doesn't really. I don't really get much reward from doing it even now. But, you know, £3 an hour. But yeah, I've got no plans. I enjoy life. I enjoy working. So there's no plans of that at the moment. Dan says, even Meet Kevin says more headwinds than tailwinds. I won't listen to that guy, man. I won't listen to that guy. You've lost me at the start of this sentence already. The title is too bullish for this market. The market is full of anxiety, less so fear, but headwinds, inflation, definitely an issue. Yeah. I'm not going to... Yeah, you lost me at Meet Kevin. I'm not going to lie. H. Poyo says, you're too optimistic, small market caps will struggle a lot. Only large caps, large cash and low debt companies will hold up. Still more pain for small caps to come, especially if the price of things keep rising and inflation continues to go at these rates. I mean, yeah, I mean, obviously if prices keep going up and inflation keeps going up, and that would probably come that this Russia situation then continues for a good kind of 12 months, then that probably will have some effect on small caps and growth stocks, without doubt. But realistically, you know, you look at that situation with the Russia situation, like, you know, it's very peak at the moment, and I think all the eyes are on Russia now, because obviously they've invaded Ukraine. It kind of comes to the point of view, okay, when they have fully invaded Ukraine, I guess, which probably looks like the outcome, whether that be in a couple of months, maybe a bit longer. What do they do there, and what's the situation in a few months' time? Basically, is what I would say. And does it kind of calm down? Does Russia continue to escalate things? We don't know. You know, the only way you have is a crystal ball to see that sort of situation. But what I would say is that at the moment, what you have here is that, what do you have small caps at? You have small caps basically at the lowest valuations. A lot, not all of them, most of them. You have small caps at the lowest valuation they've ever been. A lot of them are still going to put in very good numbers this year, and a lot of them have gone off hard comps the year previous. And as long as they kind of carry on moving in the right direction, and they carry on doing well with the financials, the lowest valuations they've ever been, how much they sold off, put it this way, I would not want to be short on a lot of these positions right now. I won't want to be short on these sort of stocks right now, because when you have this much fear and negativity baked in, sure, it's controlling the market, but all you need is a lot of, you know, things to kind of calm down slightly, and you've got all this cash on the sidelines. It doesn't take long for the slingshot to happen in the other way. It's very much like the situation when you're February 2021, you know, everyone's like, FOMO, euphoria, things get carried away. You think, oh, how is this ever going to go into a negative market? Very quickly, look how that changes. It's very much like now down here, because we're at such low valuations. I won't want to be on the short side right now. You know, there's a lot of these stocks here, and a lot of these stocks aren't going to go down to, like, you know, $0 or what have you. You know, a lot of them have are starting to get down to core holder bases. There's people that have sold out at 60, 50, 40. If you take DraftKings for example, 70, 60, 50, 40, 30. Down at 20, how many more people are left to sell at $20? How many people are going to sell at $15? You're getting down to a lot of hardcore holdings on a lot of these growth stocks and small market cap stocks now. And you know what? Like I said previously, I don't invest for the short term. And I generally, in the long term, 100%, I would be willing to take a bet with you that small caps do unbelievable with the valuations they're at. They can't stay down here for this long. But the next few months, it could be a bit of a bumpy ride. I think it could be okay, but that's the short term. It is generally a lot more 50-50. But in the long term, there's only so long these stocks can carry on at these valuations if they carry on putting in really good financials, and they will slingshot very quickly. Jordan says, what's going on with Skills? It's basically a penny stock now. I won't talk about this too much because I've covered it on the Patreon. So if you want to join the Patreon, link is in the description. I did a review of earnings and talked about Skills. But yeah, they've... my initial reactions is that obviously the guidance has killed them absolutely massively. And I think management have messed up. I think management went into Q3 and Q4 spending way too much on sales and marketing, whereas a lot of other companies had very good 2020. And then when it came to 2021 and they had hard comps to beat, a lot of them came out and went, okay, we're actually only going to grow, we're going to be flat, we're only going to grow 10% or anything like that. We're going to have a lot more stagnant growth. Skills, I think this might have also been the pressure with the short report that came out when, okay, let's just spend a lot on sales and marketing. Let's make our growth still look absolutely amazing, which wasn't too bad through Q1 and Q2, but especially in Q3 and Q4, that it got too heavy. And then going into 2022, now they've got even harder comps to beat, whereas everyone else did their hard comps last year. Skills now has hard comps through 2020 and 2021, and they've gone, right, we can't carry on, spending on our marketing and sales as much as what we have done previously. We have to cut back, and now because they're cutting back, they're taking the hard comps with even harder comps because they have 2 tough years now. Rather than having the 1 tough year. So I feel like Skills management have made a bit of a bad decision in the last kind of few months of from that point of view, but in the long term I still believe that Skills can be a fantastic company. So yeah, I think that when you've got mobile gaming, a hot sector, you've got the NFL deal still coming up, even if Skills does 20-30% revenue growth, it starts moving its way to profitability, it gets more big game titles on its platform, I still think it will do it could still do well in the next few years. It's just that the next 12 months is definitely going to be horrible for that stock, and the management have made a few mistakes, and it will probably more than likely limit the upside on it now, because when you don't grow as quick, you don't command as high a valuation. So it's going to be very painful for the stock and the company in the next coming few months. But we'll see where we're at in, I think, 12 months time. I'm a long-term investor, and I'm invested in the company for not where it's going to be in 12 months. I'm investing where it's going to be in the next few years, and I still think that esports, mobile gaming, Skills platform has potential. But it's going to be a painful few months. But that's what I'll say on that one. We've got another crypto span here. Let me just report this one out. Scott says, why not do a recap of Cineworld? Currently trading at 33p a share. That's real value in that investment for me at the moment. Yeah, I won't talk about Cineworld too much. It's the only stock I've ever sold out at a loss. And I shouldn't have sold it as well. It was a mistake from my point of view. I put a sell order in, and then I didn't realise it was going to fall as much as it did when it dropped. So yeah, that was totally my fault. But yeah, I won't touch Cineworld at the moment just because the balance sheet isn't for me. Philip says, hi JKR, I know you don't like talk about the same stock, but Boohoo have announced that the results are going to be released next week, and it's been attacked by hedge funds, and what do we expect will happen next week? I put a video out after this one. I'm sure you probably have seen it now, which is talking about what I expect from earnings. I don't know where the share price will go. If I knew where the share price would go, I would obviously go long or go short. I mean, you need a crystal ball for that, but I've given my thoughts on what will move it. Obviously looking at revenue, profit, logistic issues, outlook. So that's what we were looking for. So yeah, Sam says, just sold Shell and BP. They started dropping fast, sold before I went into negatives. Okay. Empty says that I admire your positivity, but this is soul draining. The Russell has been getting absolutely crushed since last February. This pain has literally lasted over a year with no real end in sight. I primarily invest in value and growth stocks. Most of my positions are being shorted over 80 to 90%. Wow. I don't know. Is there any stocks that have actually been shorted that much? I know like Beyond Meat's like 30%. I know Corsair's 30%. I watch CNBC religiously. And every other day some clown comes on and says their evaluation multiples are too high when really everything has been shotted into oblivion. Now with the war in Ukraine and still the persistent talk of inflation, I still no reprieve in this bludgeoning. There's so many points in here. The market's been horrible, the Russell's been horrible. CNBC, don't listen to them. You know, a lot of them are clowns, like you said. Evaluation multiples are way low, not high. And the thing is you got to look from it a long-term basis. Like you're looking here, you're looking at a lot of short-term issues. Like the logistic issues aren't going to last forever. This war with Ukraine. Or Russia invading Ukraine, this isn't going to happen. This isn't going to last forever. At some point, we are going to move on from this situation. I don't know what the exact outcome will be from that, unless it escalates into World War III, and then you probably got a few more problems than the stock market to probably deal with than that. But yeah, I mean, it's been. I agree with you. I've been through it. The stock market has been horrible in the last few months. But more than anything, when history tells you, there's only a certain point where valuations can keep getting lower and lower and lower, and eventually, they rebound. And unfortunately, to be a successful investor, you have to go through the dips. It's part of the game. Unfortunately, it's part of the game. This is why the stock market is a great way to build wealth, but not everyone does it, because these are the tough days. You have to, the days where the stock market goes up and up and up, and I'm sure CNBC were going, oh yeah, stocks are still cheap, the carry still going up, and everything's positive. When everything's down, they've got to get seats on bums, make it sound a lot worse than what it is. That's what the job is to do. To get the days where you go up and up and up, you have to go through the bad days. You have to go through the days where it goes down, and you buy the dip and it goes down, it's part of the game. There's always going to be, you've got to remember there's this cycle just happens all the time. You have cycles where the stock market goes on a good run. You have a cycle where it goes on a bad run. That's it. We've been on a good run for the last few years. We've made the money. We've made good money in the last few years. And now we have to go back through the cycle of going down, stocks going down, buying that investments, so that when the stock market returns to being in a bullish market, the S&P puts in new highs, the Russell puts in new highs, which it will do. History proves that they recover the dips 100% of the times. You have to buy them dips to have the good days and make the money again. And it's the same with the CV dip. We went through the CV dip. You had day after day of stocks going down 10% every day. You're buying it goes down another 10%, and that was actually quite a short dip really, but. And then you saw the outcomes of it. Unfortunately, that is the game, really. I understand your point of view, but that would be my answer to that, I guess. Jay Wood says, I actually saw some green today, Dark Trace. I saw that. That was actually on the news, that Russia and the cyber attacks, wasn't it? Never actually properly done a look into Dark Trace, I'll be honest with you. Don't think we've done anything on recognising the right time to sell. I'm not sure what that question's exactly on. Sorry. Bought more Boohoo. Seriously. I won't say that word because I get demonetized. If it doesn't go back up, 20% of my portfolio now. Yeah. I mean, the thing with Boohoo is that you look at the company now, it is getting valued on the point of view that it grows at like only 5% revenue growth every year, and the margins stay down at 2%. So even if Boohoo stays here forever, you're still probably going to make upside on it. And then you start considering the fact, okay, what happens if it grows at 13%, 18%, 22%, 28%? What happens if the margins go back from 2% to 3% to 4% to 5% to 6%? you know, I won't worry about it too much. But it's also the key why to have a very good diverse portfolio for sure, and why not a single stock should ever make that much of a percentage of your portfolio up. From 25% up to 20% down, my first experience of this, mindset helping me to get through it. Yeah, it is tricky, but it does make you appreciate that when you go through the cycle again, when you go from the stock market, that's, you know, back in February 2021, I was starting to get this quite often, is that when we were in February 2021 and we had stocks that kept going up and up and up, I was like selling quite a few stocks. I was selling I was like trimming the likes of like Skills at the time, Beyond Meat at the time. I was trimming like S4 Capital, Shopify. I sold my Tesla out, sold GNOG out, sold half my position in Greg's off. There's a lot of stocks that I sold off, and I was starting to get, you know, you do this all the time. You're always like, when you're in the public eye, you're always gonna have people that say you're doing this wrong, you're doing this wrong. It happens all the time. Like it doesn't bother me at all. Like because I as long as I know I'm making what I think is the right decision, then I'm happy with that. But you know, back in going back to my point, is that back in February 2021, I was starting to get like called out for like selling stocks, like, oh, you're a swing trader, and you're a short-term investor, and oh, you're the old classic saying of, oh, you're trimming your flowers and watering your weeds and all that. I was getting all that back in like February 2021. You know, people saying I was an idiot for like selling stocks in that run up, and I was like, well, no, I just generally know that in my head, my mentality is that when stocks go up, you start thinking about what you sell. You start being fearful. And when stocks go down, you start being greedy and you buy. That's what I've always been. That's always what my mindset is in the stock market. And that's what I've always, since I heard that quote from Warren Buffett, that's always been what I think about every single day. And, you know, going back to your comment, is what I was going to say, is that that is exactly it. You know, it makes you appreciate that when you go back around in the cycle and stocks go up, that this is why you sell. This is when stocks start putting in 52-week high, and valuations get stretched. This, you remind yourself of, okay, I remember back in, you know, February, March 2022, when I was down in the dumps, and I thought, you know, I was thinking, oh, next time I'm up, I'd love to take some profit, because I'll tell you what, you know, when we get back into being in a bull run and stocks are back at 52 highs, you start thinking, oh, you know, we're on a good run here. I'm going to carry on holding. I'm not selling it. You know, I'll carry on holding it. It's going to keep going up, keep going up. And one day that stock will go, then we'll go back into the cycle of going back down again. And you'll be thinking, oh, I didn't sell anything. Like, I didn't sell anything at the highs. I was getting a bit greedy. And you'll have to remind yourself at this point, when you go, there's always going to be that bear market, and I wish I'll take profit. And that's why, going to my point, is that back in February 2021, I was taking profit, because I knew there's only so long that you can keep in a bull market. And I bought from the previous dip, and I was taking that profit on that table, building that cash pile back up, because then when we do get into the bull market, you do look at them times when we're in a bull market and go, thank God I took a little bit of profit off that table. So yeah, it does. These cycles make you appreciate the highs a lot more and appreciate the lows a lot more. So yeah, I would say that. We've got another nice comment from Noah that's spamming us here. What do you think about SoFi? I don't know the company that well. I'll be straight up with you, so I can't give you my thoughts on it. I heard good things about it though. Running Man says just buying, not selling, getting some crazy cheap stonks. Yeah, 100%. Skills please. Yeah, I mentioned it a little bit earlier, but I've done an earnings review on Patreon if you want to check that one out. Pokemon XLPS said, haha, paid influencer. Man, obviously this man knows nothing. What coming? I mean, I've never had a payment from anyone. These are all my own thoughts and my own thoughts. I'll just make that clear, that I've never been paid by a company to promote it. You know, this is JKR Investing, not Jack Spencer here. So maybe Pokemon X tips, maybe you want to stick to your Pokemon Go. That might be good for you. So I agree with you, and I love to increase my positions to just really struggling with gathering new cash flow anyway. Thanks. Yeah, and 100%. That's, for me, that's exactly the same. You know, I'm kind of like, this is what you have a cash pile for, and you keep buying and keep buying. But the problem is you don't know when the bottom is. So sometimes you run out of your cash pile before it gets to the bottom, and then you're just trying to get as much cash in as possible to keep buying the dip. So yeah, 100% agree. Another one for skills. Maybe we can do a skills video at some point, but I've just covered it on the Patreon. So yeah. KL says, your analyst assumes that we are close to the bottom. 2020 and 2021 saw comically large overvaluation of highs after highs. It makes all the sense in the world for that we pull back to where the prices were in. Yeah, I agree to some extent. I don't believe that 2022 we had that crazy high prices. Some potentially, but I won't say we're too. I won't say we're too high. 2021, yeah, the valuations got stretched. You know, you look at historic valuations; they were high. Totally agree. We'd pull back to prices we were in October 2022, and that's still a long way down from here. Yeah, not sure I agree with that point either. If you look at the likes of TDoc, right? So you're saying that we're not at prices of October. So if we go back to October 2020 on TDoc, let's see if we can find October. I mean the 16th, should we go from the 16th? So you said we won't pull back down to the prices of October 2020. We've pulled back. We're down another 69% from there. So yeah, when you say that we would pull back to prices we were at in October 2020, it's, in my opinion, no. We've if you look at, there's a lot of stocks I could use here, but I'm using TDoc. We're way past October 2020. You know, we were at prices, what price are we at now? I mean, we're at prices that, you know, you're nearly October 2019. You know, you're having nearly 2.5 years of financial performance wiped out on companies. So, and there's other points you can use as well. Like for me, like, yeah, I disagree with that. We are way past that point, and we're even far past that now. So, yeah, we've had, once again, in my opinion, a way too far overcorrection. Jim says Roblox and Fiverr. Don't know Roblox too well. The only thing that it looks like everything is doing very well with the company. The only problem I ever had was with the valuation, but it has had a recent pullback, but I don't know the company too well. Fiverr, I really do like the business. If it was a little bit cheaper, I would love to own it. It's very high up on my watch list. Rocco says, you just said gang going to zero. Everything you literally say is wrong. Jesus, what is your net worth? I mean, I don't know. I don't know where you got that from. I think you might have watched the wrong video. I don't think I did not say in that video that gang is going to zero. I think gang is in a very good position with a very good 2021. And I believe that more than likely that stock will be a very good return in the next 5 years. I would expect one of those that I expect at least double my money on. Realistically, I'd be very disappointed if I get less than probably a 5x return on gang in the next few years at the valuation it's at. If I can get the average lower, that is anyway. So yeah, don't know what's happened to you, Rocco. I think you got a bit lost. Hightech says 4K in ASOS. A bit of an ASOS fan. ASOS and Boohoo are just literally following each other at the moment on the share prices if you've ever looked at them. Ewan says the second half of the year I could see picking up, but will be a real roller coaster until then. I just feel way too much fear everywhere at the min. Wild times to say the least just now with the Ukraine flag. So yeah, I agree. For me, I do think the second half of the year, hopefully we have a calm down of the logistics and everything like that. I think the second half of the year is what I agree. Which the video is basically on, is I think the second half of the year will be good for especially small caps and mid caps. I think, yeah, over the next kind of month, maybe 2 months, will still be very bumpy, as more than likely a lot of this Ukraine-Russia situation goes on, for sure, and depending on what Russia carry on with a lot of their actions, I guess. But yeah, I agree with what Ewan says. I think it will be a very bumpy ride, but I think the second half could come strong for a lot of the stocks. And that's them all through, guys. That is everything done on these videos. So yeah, hope you enjoyed it. 181 comments gone through. Obviously a couple of spam in there that we had to deal with, but hope you enjoyed the video. Hopefully it's something a little bit different than we've never done before, something a little bit unique. Definitely a long video. It's that long that I don't know if I'll follow up with a video on Monday that is that long. So hopefully I haven't bored you too much, but it was good to kind of just get some like back and forth on some comments really, and give a bit more deep dive into some of them comments, I guess, really. Yeah, definitely the longest video we've done for a while on the channel, but hopefully there's some useful information in there. If it is popular, maybe we could do another one on some time. And yeah, thanks for watching, guys, especially if you guys made it all the way to the end. And I'll catch you in a bit. Enjoy the rest of the Sunday. Watch the Manchester derby, and hopefully the boys in blue win. And I'll catch you in a bit.